Italy is the new tax heaven, so stop looking for offshore islands. You could save a ton of money eating pizza in the European countries with one of the highest quality of life in the world, if you are in one of these four groups. I am Jacopo, and on this channel I explain the Italian real estate market in plain English. Let's talk taxes and how moving your tax residency to Italy can save you a ton of money. You have four ways to do that, and believe me, the last one is really crazy. The tax residency is where a person is legally considered resident for tax purposes, and this determines where and how much you need to pay in taxes. Typically, you are a tax resident in a country if you live there most of the year, or if you work there, or if you are legally resident in that country. And here is the secret. Being a tax resident in Italy allows you to get some tax incentives. But being tax resident in Italy means that your global income will be taxed in Italy. You need to avoid to be taxed in Italy and in your home country. This is usually possible with DTAs, double taxation agreements, that Italy does with a lot of countries in the world. This kind of treaties make sure that you only pay once taxes on each piece of income, and between the two countries they decide who will get the taxes and on what. What you need to know is that there are mainly two different DTAs agreements that your country could have with Italy. The first one is the tax credit method. So your home country gives you a credit for taxes that you paid abroad. So if you need to pay 200,000 euros of taxes in your home country, you will just pay 100,000 because 100,000 is already paid in Italy. But the best one is the second method, which is the exemption method, where your home country doesn't tax at all foreign income. So, for example, you live in Italy, you pay taxes in Italy, and even if these taxes are lower than what you should pay in your home country will not request any payment. If you are a UK citizen and you are not domiciled in UK, you will just pay in Italy and UK will not request anything else. US, instead, it's a bit different. In US, the main rule is that you need to pay the difference from what you paid in another country and what you should pay in US. If you pay 20% taxes in Italy and in US you should pay 35%, this means that you still need to pay 15% to US. But there is also a foreign earned income exclusion, which says that if you are a US citizen or green card holder and you get income from other countries, up to $120,000 a year, you will not be taxed at all in US. So actually, for most of the people in most of the countries, you will not pay any taxes in your home country. But now let's go deeper and let's speak about the four groups of people that really needs to move to Italy to save taxes. The first group of people are digital nomads or remote workers. In this case, you should move to Italy and open a small business here, registering a freelance sole proprietorship, what we call in Italy partita IVA. And if your revenue are up to 100,000 euros, you will be under the flat rate scheme. In this situation, you just pay 5% on taxes on your income. And as you are below $100,000 a year, in most of the country, even in US, you will not pay any additional taxes in your home country. You also have an additional forfeit deduction, so you will just pay 5% out of the 78% of your income. That on 100,000 euros a year is 78,000 euros. This results in 3,900 euros taxes per year on an income of 100,000 euros, which is way less of the average income in most of the countries, like US, UK or Canada. The nice thing is that the forfeit deduction is not the same in any kind of job. For example, if you are a consultant, we say it's 22%, but if you buy a property in Italy and open a small business with short-term rentals, the deduction is 60%. This means that you just pay 5% out of 40% of your revenue. And if your revenue is 100,000 euros and you are making short rentals, it means that you will pay 5% out of 40,000 euros. Now, these numbers are just rough estimation, and you could pay less or more in your home countries or in Italy depending on your specific situation. So you need to speak with an accountant to discover the best way for you to move your residency in Italy. But I would like to remember you that if you want to buy, sell or manage a property in Italy, me and my company, Valente Italian Properties, can help you out. We work nationwide, so if you have some real estate project in Italy, reach out, you find everything in the description of this video. The second group of people that can enjoy a huge tax ease in Italy are researchers and professors. Because if you are a researcher or a professor and you choose to move to Italy to work in research, university, or even private R&D environment, you can benefit from one of the most generous Italian tax benefits. Under this special regime, 90% of your employee income will be free of taxes for up to 4 years. So, if you have an income of 100,000 euros a year as a researcher or a professor, you will be taxed on just 10,000 euros. And in this case, the taxation is just 23%. This means that you will just pay 2,300 euros of taxes. To qualify for this tax benefit, you need to have lived abroad for at least 2 years. But if you are a foreign citizen, this will be easy. And then move your tax residency to Italy. And once you do, your income from research or teaching activity will become really tax efficient. And for the majority of you, this will be also tax-free in your home country. The third group is due to the Impatriate tax regime. If you move your tax residency to Italy after living abroad, you will usually get a reduction on your taxes of 50% for 5 years and up to 10 years in some cases. The eligibility depends on your education and the time spent abroad. With a university degree, you just need 2 years abroad. If you don't have any university degree, instead you need to live abroad for 5 years. But in both cases, you need to move your residency to Italy, to stay in Italy for at least 2 years and perform your work mainly in Italy. So again, let's take our example of 100,000 euros a year of income. In this scenario, only 50,000 euros will be taxed, and in this case you will have a taxation rate of 35%. So this means that you will end up paying 17,500 euros instead of 30,000, with a saving of 12,500 euros. The fourth group, and the last one in my opinion, is the craziest, especially if you are a high net worth individual. In this case, you can enjoy a special flat tax regime, because becoming an Italian tax resident, you can choose to pay 100,000 euros of taxes every year, and this will include all your foreign income. There is no income limits, and you can also extend this fiscal regime to your family members, and for any family members you will just need to pay additional 25,000 euros. For example, if you have 1 million euros a year of income, you will just pay 100,000 euros of taxes. And let's assume that your income grows up to 2 millions, 3 millions, or even 10 millions a year, you will always pay only 100,000 euros of taxes. To qualify for this special tax regime, you need to have been non-resident in Italy for 9 out of 10 of the last years, and you must move officially your tax residency to Italy. However, this special tax regime doesn't cancel your obligation in your home country. For example, if you are a Canadian citizen, move to Italy, and you move your residency to Italy, usually you should just pay these 100,000 euros and nothing in Canada. But if you are a US citizen, in this case, you will have to pay the difference in United States. But still, also in this last case, if part of your income is coming from the work that you do in Italy, up to $120,000 a year will be foreign earning income exclusion. So you will not pay taxes on these $120,000 in US. So even in this case, you could have some savings moving to Italy, but not as crazy as from other countries. So if you need help buy, sell or manage your property in Italy, contact me and my team, everything in the description below, and I hope to see you soon in Italy. And if not, in the next video. Bye.